Ever wondered how money supply impacts the economy? This analysis explores how analyzing this metric across multiple timeframes reveals fascinating trends that influence policy decisions and investments. This video dives into the concept of money supply, a crucial factor for anyone interested in economic health. By analyzing trends over the past decade through two lenses, quarterly and monthly, we uncover a captivating story of economic shifts and their implications. The money supply, a key player in the economic game. In today's dynamic economic climate, the money supply takes center stage. This metric, representing the total amount of cash and easily accessible assets circulating within an economy, offers valuable clues. It sheds light on economic health, potential inflationary pressures, and upcoming policy changes. The big picture, a quarterly look at 20 years. Looking at the money supply over a 20-year period through a quarterly lens, a clear trend emerges. During the pandemic, the money supply skyrocketed, exceeding expectations for regular economic growth. This surge can be attributed to unprecedented government spending and central bank interventions aimed at bolstering the struggling economy. However, for most of the pre-pandemic decade, the money supply followed a steady path, reflecting gradual economic growth and controlled monetary policies. 2022 and the money supply decline. The first quarter of 2022 marks a turning point. The money supply shows a distinct decline, likely due to the initiation of quantitative tightening, reducing the money supply, rising interest rates to combat inflation, and a decrease in government stimulus. This quarterly data highlights a critical period where economic challenges necessitated a contraction in the money supply. A different story. Shifting gears to a monthly analysis of the same 10-year period unveils a contrasting story. While the monthly trend mirrors the quarterly data to an extent, the most recent month's reading deviates significantly. This perspective emphasizes the value of monthly data in revealing short-term fluctuations and deviations from long-term trends in the money supply. Positive growth in mid-2024. A closer look at the mid-2024 monthly data reveals a stark contrast to the quarterly reports. Whereas the quarterly reports showcase a decline, the monthly reading demonstrates a notable uptick in the money supply. This positive trend suggests a recent influx of capital into the economy, possibly driven by short-term fiscal policies, other stimulative economic factors, or proactive measures by the Federal Reserve adjusting interest rates to stay ahead of economic developments. The contrasting narratives between the quarterly and monthly perspectives underscore the importance of choosing the appropriate timeframe for analysis. Quarterly data provide a broader, more stable view of long-term trends, while monthly data capture the short-term dynamics that offer early warnings of economic shifts. This understanding of timeframe differences is crucial for policymakers. The apparent decline in the quarterly data might suggest a cautious approach, focusing on stabilizing measures. In contrast, the positive growth in the monthly data could signal emerging investment opportunities and growth, suggesting a more optimistic near-term outlook.